NAAIM exposure index. This is showing what active money managers are doing, and they're all in. They're all in at major resistance. Again, we do have a potential divergence back over here that may or may not be done yet. But this is suggesting we're likely going to get some kind of pullback in August. That bearish engulfing here in the weekly time frame last week, but there was no confirmation to that. Candlesticks are meaningless unless they get confirmed. So just something to be aware of. You're up at these extremes, you tend to either get pullbacks, some of these smaller pullbacks that I marked here, or even in December, or you tend to get a reversal like this divergence that developed here. So again, worth paying attention to. It was a divergence that marked the 2022 top. Bullish divergences have marked bottoms or extremes. Like at the 2023 low, there was no divergence, but we reached an extreme. Here, have a potential divergence that, again, may or may not be done, still may go higher, but again, it is suggesting if we do go higher, it'll likely be followed by some kind of corrective move if we don't establish a lower high. Even if we move to a higher high on the exposure index, you're still up here at extremes. So keep that in mind. We had these divergences there in July, began to see a sell-off. The confirmation bar, no follow through. Now this rebound back up to fill the gap. Do we get another reference point of a divergence or confirm a lower high? And we're going sideways. Play out either way. I thought we had a top on the July 31st bar, but now we're going sideways. So I could be wrong about that. Going sideways, meaning we're either now going to get a lower high and see everything flip back to bearish, or we're going to get a higher high. They're going sideways or up at this point. Talks about their 50-day moving average here on the S&P. I told you down here when we were in single digits, that's why I told you I thought we had a bottom on April 7th. Here, I told you I thought we had a top because of this divergence, as the S&P slammed into major resistance. And here it was slamming into major support. On the put to call ratio, a divergence very similar to what we had at the February top. The 5-day moving average at the put to call ratio, either we get one more reference point of a divergence and go higher, or if we get the lower high selling off, see the put to call ratio spike higher if that lower high scenario sets up. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. If you follow the link below to take you to a secured site, you can donate any amount you want or make it a recurring donation. If you do that, I thank you. Thank you for your consideration for that. The risk model, again, look at the risk line going from green to red back to green. The S&P trend started to turn bearish with the downturn, flipped right back to bullish S&P trend, and then the risk on, we're still in a risk on. We didn't flip to risk off. There was a confirmation to the reversal bar on July 31st, but no follow through. We still may get it if we get a lower high, but the risk is that we go and we get back up, slam into resistance in the weekly time frame and the resistance in the daily that I talked about in my last update, and test the upper Bollinger Band again. End up forming a divergence before turning down. More green bars on the oscillators I talked about in my last update. So we're likely going to see an August sell-off. There's still the possibility that we try to exceed this high. Told you I thought we had a top on July 31st. Could be wrong about that. I have the guts to tell you what I think. We do have this, again, divergence with risk on. We've seen indicators diverge with the S&P. S&P is making new highs. Gone is not. It's making a series of higher lows, and they're diverging. So again, sell-off is coming, but we weren't able to flip into a risk-off environment yet with the rally back up. The S&P risk model here. In my first weekend video, I talked about how the NASDAQ moved to a new high, the S&P did not. S&P still may join it because now we have coming back up here to the 78.6 Fibonacci just above it here on the S&P. This is a 60-minute chart. Now we have signals flipping back to bullish. So you've got signals going back and forth from bullish to bearish, now back to bullish. The risk is that we go and we try to make a new high. Again, I talked about at some turning points, we have NASDAQ and S&P diverging from one another, where one of them makes a lower high, the other one makes a higher high. But the risk is that S&P joins NASDAQ and goes up towards this upper channel line and tries to exceed this peak over here, because momentum turned back to bullish on Friday for S&P after it had turned bullish on Thursday for NASDAQ, and trend signals, not all of them, but many of them, turning back to bullish on Friday. So now we're going sideways or up. Now, even if the S&P makes a new high, it's likely not going to last very long. We're still likely to see the seasonality, the August seasonality, play out. There is a high probability of a pullback. The market is very extended. What I'll be watching for is, do we try to make that higher high on the S&P, or do we make a lower high? Now, I just want to show you some of the signals in this video are turning back to bullish. You see what I'm looking at. As I said in my last update, if the S&P does go make a higher high, again, you have this trend line directly overhead to contend with. Again, the further right to the chart we go, the higher the trend line goes, so it would be slightly above our previous peak from a week and a half ago when we peaked on July 31st. But if we do make a new high, again, this trend line comes in to play. And the trend line here with their linear scaling that I talked about in my last update as well. These trend lines come into play. If we try to push a little higher, you still have these trend lines to contend with. They're just a little bit higher up because each week, as we go along the chart, the trend line is rising. So just pay attention to those trend lines. If the S&P does try to exceed the July 31st high, and that was linear, this is log scaling. S&P did have that bearish bell hole candlestick right into the resistance levels. I showed that in the last video. I just showed you the weekly charts. I showed you the daily chart, how we hit the channel line in the daily time frame. It's a black Marubozu candlestick. It means that there's no topping tail. It's just a flat upper boundary of the candle where you open higher and you close lower. And when you get that candlestick at the end of a run up, it's a bearish bell hole candlestick. So far we got a confirmation, but no follow through. You got to have both, and we're rallying back up. So do we try to challenge that high or not? It happens. I called a top there, but my signals are now starting to flip back to bullish as we get back above the red line, the 10 period, and we came back to fill the gap. So again, the risk is that we try to make a new high here. If we do, it's likely to fail. As I said in my last update, we could get more green awesome oscillator bars and still end up forming a divergence on the awesome oscillator in the more recent price action here, and on the RSI. I talked about my last update. You see that RSI right here. NASDAQ is forming a divergence. It did move slightly above the previous peak. The S&P do that. Again, we had the bearish rising wedge. I've marked this as a breakdown of a rising wedge and a back test as completing primary wave 3. It may not be done yet. The Elliot wave is speculation. Don't trade Elliot wave. I try to use it to determine price direction and short-term fluctuations. Like right over here, an ABC move, I told you, that tells me a bottom at key support, because we need a 5-leg push down for this to be a top. That's why I told you it wasn't a top and told you we were going to go rally to new highs. If my primary 3 is invalidated, then it's not done yet, which means we haven't started the primary wave 4 yet. So again, just got to be looking. Elliott wave is just looking to validate or invalidate things, trying to determine price direction. It's not a Nostradamus hocus pocus nonsense indicator. It's looking at price moves that are corrective and impulsive, 3-leg moves, 5-leg moves, and trying to determine future price direction based on that. I have alternative counts, and so again, I don't trade it. I use my mathematically based indicators to make my trading decisions. I do believe that this is what is likely taking place. I believe that we've either finished primary wave 3, or if we do end up pushing higher, it's going to finish. We'll get a primary wave 4, then 5, and then I think you're going to complete the cycle top. That's what I think is going on. I warned you when we were at extremes, we still could see a divergence develop here on the RSI. I told you I thought we had a top. Again, I could be wrong, and we still may end up forming the divergence. I just have the guts to tell you what I think, and I'm not perfect. I correctly called the bottom and predicted this rally I was looking for a top, called one. That doesn't mean I'm going to be right. I'm just telling you what I think. The stock market doesn't care what I think. The stock market is going to do what the stock market's going to do. I don't tell the stock market what to do. It does what it's going to do, and I tell you, hey, I think this, or I think that. But that's speculation, and we needed a confirmation follow through. We did not get it. We still may. We still may get a lower high, but there's still the possibility of pushing higher, getting the primary wave 3 at higher levels, not yet completing. So that would change my count here. We're kind of in this trading range. We went sideways here. We went higher. Now we went back to that level. That's formed this little head and shoulders top, I should say. If we get a lower high with our bear flag, if we break down, we're in this trading range. If we go higher, slamming into major resistance again, hitting the upper Bollinger Band again. We got rejection over here. That's why I told you I thought that's where we had a top. We'll see what happens here. Do we get the lower high, or does the divergence form on the RSI? Stochastic's turning back up. MACD is still bearish, but it still may try to turn back up. And again, one of the quirks with the MACD, as I've said in my last update, is you get the crossover and you go sideways, which again is what my signals are suggesting we are doing by now flipping back to bullish. Last update, NASDAQ is already moving slightly above that previous peak from July 31st. Again, you've got a divergence in play now. It may take a few more days to finish, or it may finish immediately here at the upper band, as we've turned off of the upper band on many occasions. But you may hold above it for a few sessions before you turn down off of it. That may form a divergence with the awesome oscillators I showed you in my last update. Had the VIX back testing, but it broke the trend line now and went back below the lower Bollinger Band. We had gapped higher, breaking out. Now we're throwing back into the trading range, going back towards the lows, just as the S&P is going back up towards the highs. So again, the risk is the S&P goes and makes a higher high, and we come back and try to hit this trend line again, and the breakout failed to produce a reversal on the S&P. So again, we'll be watching. If we're going to see volatility increase, we got to get this MACD back up above the center line. Right now it's starting to roll over here. So again, it's possible the S&P isn't done with wave 3 and goes higher. We've had these bullish divergences. You could clearly see them here on the RSI, the stochastic, the MACD, but we've gotten a breakout, gave us a push down on the S&P, but just back to the horizontal support level, back to this horizontal support level in here, and that's where we bounce. So right now you've got a possible lower high. You've got to turn back down, and again, this is causing signals to go back and forth from bullish to bearish, back to bullish. Fear greed index give us a divergence that gave us that decline with the reversal bar on July 31st, when we dropped back to support. Now the fear greed index turning back up. Does it get another reference point of a divergence before reversing, or do we validate a lower high? Now, some signals are back to bullish, others are still bearish, but we saw momentum flip back to bullish. Here, you can see the bars have flipped back to bullish, going from green to red, back to green. But here, we still got the red cloud. So again, if we go higher, that will flip. Did see a lot of signals turn back to bullish on Friday for the S&P, as we saw on the NASDAQ on Thursday. We're going sideways, so we're either going up, but had signals turn bearish, now some turning back to bullish, like the bars here. Again, the bars have been green all the way up, even though we've had some turns where momentum has shifted. Bars have remained green up until we've had that reversal bar confirmed after the July 31st high. But just wanted to show you these signals because they are mixed. Again, had blue bars all the way up. We had the downtrend, the reversal in February. Red bars all the way down. Had the reversal here with the higher low, the higher high. Blue bars all the way up. Got some red. Now we're back to blue bars. Had some red in the background there. Now back to green. So again, this is telling us we're either going sideways or up. Bars were red. They went back to blue. I told you all my signals did not turn bearish when we saw that reversal on July 31st. Here I had a bullish signal, and we're still on a bullish signal. Again, Nice reversal there at the February peak. Reversal here after the April low and the higher low, the higher high. Here we're still bullish at this point. Here we have blue bars, went to red. Now Friday turning back to blue bars here, really just showing we're going sideways. Either we're going back up or we're going sideways at this point. Again, got mixed signals. Got a sell signal here, another sell signal here, but the bars are flipping back to green. The line is flipping back to blue. Mixed signals. Started trending lower and reversing here after the February peak. Again, the higher low, the higher high signals turn back to bullish, and now they're going back and forth here. Again, do we get that lower high, or do we try to form a divergence on the RSI like the NASDAQ's doing? Mixed signals. Same thing here, mixed signals. Red bars, now back to green. We had a blue line, turned red, now back to blue. Again, mixed signals. Bullish, bearish, bullish. We had the red background there and flipped right back to green. And if we go higher, again, there's major resistance directly overhead and that upper Bollinger Band. Even if we do try to make a higher high on the S&P 500, there's a lot of resistance. Says there was a lot of support down here. So this may quickly still turn even if we do make a new high. But we are going sideways. Here we got a short-term bottoming signal, but look at this, signals going back and forth. Bearish signal, bullish signal, back and forth. Some signals showing that we're just going sideways. Again, right here, we had the red bars, the red cloud, all the way down from the February top. And then, again, bars reversed on April 9th, the day of launch of the tariffs, and then Trump paused them. The blue bars have been present all the way up until August 1st, when we had that confirmation of the bearish bell candlestick. It had red bars, but now flipping back to bullish. So this is telling us we're going sideways now or up. Again, mixed signals. We're seeing momentum turn bullish here. We've got the cloud trying to flip back to green here. The line is flipping back to blue with momentum, but bars are still red. We still have a sell signal here. So again, going sideways, you got mixed signals. Same thing here. Again, red bars through the decline, had the blue bars all the way up until we had that breakdown and back test. We got confirmation August 1st. We got red bars. No follow through to our reversal bar. The bar flips back to blue. So mixed signals. Signals bullish, bearish, now back to bullish. Even on the intraday chart, again, signals flip to bearish, now flipping back to bullish. So again, we're going sideways. Telling us either we're going up or we're going sideways. Same thing here. Bullish, bearish, back to a bullish bar. The cloud flipping back to bullish. S&P here, again, bearish, back to bullish, and then bearish, and now Friday back to bullish. We're still likely to see an August sell-off, but we still might try to go make a new high. Slamming up into resistance again. Bearish engulfing candlesticks from the previous week did not get confirmed in the weekly time frame. We had a sell signal on July 31st. We saw bars turn red, back to green. Here, the cloud is still red. We're bouncing off the ribbon. So again, you've got mixed signals. Now the signals here, it tells me when we're either going to get a counter trend or we're going to get a reversal. Over here it was a reversal at the bottom. Over here it was a reversal at the top. At the times it's marked as counter trend moves up and down, which is this. We'll be watching. Do we get a lower high or do we get that higher high and end up forming a divergence on the RSI? Does the S&P diverge with NASDAQ? The possibility of more green bars on the awesome oscillator in the daily time frame, as I talked about in my last update. I talked about how in January and February we did the same thing. We went sideways. Here we had a peak in January. We were slightly higher than the December peak. And again, had some volatility, but then climbed up, inched a little bit above that January high. Look at that, just barely above the January high. And then we had this. Now, I'm not believing that we're going to get this kind of a move right now. If we don't get a lower high and we do inch up a little bit higher, you still may see something very similar to what we had happen over here in between January and February. We had mixed signals back then as well, but that did end up getting a divergence that did give us a bigger sell-off. I think we'll get a sell-off, but then I think we're going to go to much higher levels. As I said, about 66 or 6,700 on the S&P before I think we top. I wanted to show you some of these signals as we have a mixed bag of signals telling us we're either going sideways or we're going up. We're going to go back down and get a lower high. Everything has to revert back to bearish. We still may see a divergence on the awesome oscillator, the more recent price action that I showed you in my last update, and on the RSI. They're in those daily time frames.